Ready.
All right. So, welcome to part two. Again, I am Melissa.a.white with the Cronmiller Team and Opportunities Coach for Keller Williams Doylestown. I'm sitting down today with my good friend and mortgage broker, Zac Yeni with Vanguard Lending.
Hey, how's everyone? Thanks for having me, Melissa.
Yeah, so we're back to discussing the advantages of owning multi-unit properties, especially for first-time home buyers or those traveling a lot for work. So let's get right into the financing and affordability of the opportunity. So, Zac, what are key differences in financing a multifamily versus a single-family home?
Good question. The main difference comes down to how the lender evaluates the property and your ability to repay the loan. With multifamily homes, especially the 2 to 4 units, lenders look not only at your personal income, but also at the potential rental income from other units. The loan limits are higher than for single family homes, and sometimes the interest rate can be slightly higher due to the added complexity and managing of multiple units.
Okay. So you said that loan limits and interest rates can be a little bit different. How about down payments? What is a typical down payment for a multi-unit?
Yeah. So for owner-occupied multi-unit properties, meaning you live in one unit and you're renting out the others, you can often qualify for down payments as low as 3.5% with an FHA loan. For conventional loans, usually require around 15 to 25%, give or take, depending on the number of units and your credit profile, et cetera, et cetera. If you're buying strictly as an investment property, not meaning like you're not living in one, you'll likely need closer to 25% down.
Okay, okay. So that sounds really good, like an FHA loan for a first-time home buyer, or
Mhm.
in the situation that I get asked a lot of traveling employees, 3.5% is really not that bad, especially if they're going to be living in the unit.
Correct. Yep, absolutely. Absolutely. It's very helpful for people getting in. They're starting off investments. It's a great way to get in.
Um, so then that actually comes into this. Are there special loan programs or incentives also available for owner-occupied multi-unit properties?
Yeah, yep, definitely. So for FHA, there's FHA, VA, and even some state and local first-time homebuyer programs allow you to purchase up to 4 unit properties while still taking advantage of low down payment assistance and favorable interest rates, et cetera, et cetera. Many of these programs also offer closing cost assistance, which is huge, and reduce mortgage insurance, which is also huge, which makes getting into a multi-home way more accessible for first-time homebuyers.
Oh, that's awesome. Okay. So a 4-unit property. So you live in one and you can rent out three of them. I mean, it
Yeah,
sounds like, a win-win here, like almost as if you're covering your whole mortgage
yeah,
with your rental income. And then
exactly.
on a 4-unit, the risk factor is rather low too, right? I would say you're not going to have all 4 units vacant at any given time, theoretically.
Right. Correct. Exactly. As long as, maybe one vacant, you got other ones. So, it's diversifying.
Oh, that's awesome. So, does that rental income then from the additional units factor into qualifying for the loan?
Um, yes. So, one of the biggest perks lenders can use is a percentage of the projected rental income, usually around 75%, to help you qualify for a higher loan amount. That means you can often afford more house because the income from tenants help you offset your monthly payment in the lender's eyes.
Okay. All right. So, we're gonna, I think, pause there, and get into part three soon with investment potential and the cash flow involved with owning a multi-unit property.
Awesome. Looking forward.